Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news financial markets are souring today. But first, the overnight dairy auction brought little change. Although volumes offered were the highest in 10 months, prices dipped again for the third time in a row and the seventh time in the last 8 auctions. However, the falling Kiwi dollar enabled the overall result to boost a gain in local currencies. In fact, that means overall prices are back to where they were in June in New Zealand dollars. Wall Street has returned from their long weekend holiday in a grumpy mood. The S&P 500 is down the thick end of 1%, and this time it is economic data that is finally to the fore. The widely watched ISM factory PMI has dived into a contraction, and that was led by a sharpish drop in new orders. In fact, this is the first contraction in nearly 3 years, and markets noticed. They also noticed that construction spending fell 2.7% in July from the same month a year ago. All eyes are now on August car sales reports. Analysts expect them to be flat in August from July, and any undershoot is likely to be market negative. In China, they're preparing major new stimulus. China will step up fiscal support to boost growth amid more signs of economic slowdown, according to a statement released by the government's Financial Stability and Development Commission. This is a body that is led by the top China trade negotiator with the US. Yesterday, Shanghai equities were up modestly after the announcement. In the UK, their new Prime Minister seems to have lost the support of their Parliament already. A new snap election seems likely now. The EU still has even less idea of where the UK stands in its Brexit negotiating position. In Australia, their central bank has kept their policy rate at 1%, surprising no one. The largest quarterly goods and services surplus on record and a narrowing net income deficit contributed to Australia recording a $7.5 billion current account surplus for the June quarter in 2019, its first in 44 years. Poor retail spending data yesterday in Australia undermined the concept of using helicopter money to boost an economy. They just had a $16 billion election tax cut delivered as a cash refund, but consumers aren't spending it in the way intended. The US Treasury 10-year yield is down 3 basis points, now at 1.47%. Gold is up to $1,544 an ounce, a rise of $25 since this time yesterday. US oil prices are weaker again today, now just on $54 a barrel. The Brent benchmark is also lower at $58 a barrel. And the Kiwi dollar has risen on weaker greenback and now up marginally to 63.3 US cents. On the cross rates, we're much lower at 93.6 Aussie cents, and against the euro, we're firm at 57.7 euro cents. That leaves the trade-weighted index little changed at 68.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.